Alright, in the last video I showed you an introduction to day trading, and in this one I'm going to be running through 14 different types of studies and signals that can be used to figure out if a stock is going to be rising or falling for day trading. And I apologize for the sound from the 3D printer. I have some parts that are getting prototyped right now, and they're actually going to be ran on the die-cast machine you might have seen in episode 2, and their molds are going to be made at D1 Mold, which was episode 3, I believe. So if you want to check that out. But let's get to the stock market. Alright, so this is the setup that I currently have to study stocks, and all of these different graphs and things here give you indicators, or what are called signals, to whether you should buy or sell a stock, whether it's going to be going up or down. And if you can't read these, then this is the video for you. So on the left, I use this study to figure out where my support and resistance lines are and how strong a trend is and whether it's going to flip. On this side, on the right study, I use this as a momentum indicator which also tells me if the trend is going to go up or down, but it doesn't tell me support and resistance lines. This is purely how strong of an upward trend we have, which tells me whether I should stay in a stock or get out of a stock. So let me clear these off, and I will go through each one by one. Now, this video is not going to go into the details and intricacies of all of these different things because I personally have spent like 15 to 20 hours watching videos on all of this stuff and how it different works. Ichimoku Cloud alone, I've watched 5 hours of, and I've read through like 5 articles, and I still really don't. I understand it, but it's very sophisticated and it's very accurate, which is why I'm dedicating so much time to trying to learn it, is because it works really well if you can understand it. But let's start with the simple things. The first one is the VWAP. Now, the VWAP is a measurement of volume based on price. So it can tell you if a stock is too overpriced or too underpriced. And using it, you can figure out where support lines are. It's a very good indication for beginners. If you just want simple analysis and you don't want to get cluttered with something, VWAP is a very good indicator. I personally only use the middle band. I take off the upper and lower band, but that's because I use the Ichimoku Cloud and a few other things. All right, next up is RSI, which you can see down here, which is Relative Strength Index, and this is a study you'll see almost everybody use. It's a measurement of price and whether it's been overbought or oversold. It's a really good indicator to use, but it has some limitations. I see some people look at it and see that it's gone over 70% or under 30%, and they think that the stock is going to flip. It's not necessarily true. Just a good indication on whether it's going to be taking off or not. I wouldn't use it as an indicator of whether a stock is going to flip. There's much better momentum indicators, which I'll show you in a second, that can figure that out. And next up we have the MACD 2-line and the histogram. They work kind of the same way. They are a measurement of momentum and selling price. The way you can look at it is green means the momentum's going up, red means the momentum's going down, and then you can watch the curve to see if it's flipping. And with the MACE 2 lines, a good indicator of a takeoff is when the two lines converge, and when they converge back, they start to drop. But it's not always accurate. I use these as more of a secondary check. My momentum scanner and my Ichimoku Cloud is a much better indicator of where a stock's going to go when you combine them together. And also, again, I'm going to repeat this probably a few times. Take the time to watch videos that are dedicated to every single one of these, because there's a lot of nuances and intricacies in them that I'm not going to cover in this video because it's already going to be a very long video covering 14 different types. Now, so far we've kind of covered, is a stock overpriced, which way is the momentum's going, and a basic support line. Now let me show you some more accurate ways to depict momentum. Now the first one is the TTM Trend. And what this does is basically just turn your candlesticks into blue and red, and they're a measurement of momentum. And the easiest way to think of this is, do the bulls have control or do the bears have control? If it's bullish, the trend will be blue. If it's bearish, it'll be red. And this can give you a good indicator on whether a stock is going to flip and go in the red. If you bought into this stock at 160 to 162 and it starts to take off, if you've done your homework, you might know that whole numbers are a psychological resistance barrier that, every time something goes up to 2, 3, 4, 5, 6, there's always a resistance barrier there. So if you wanted to, you could draw a resistance line right at 2, and then you can see that the stock is bouncing. But you don't know where the stock's going to be going during the live action, so how do you depict on whether it's going to drop or not? Well, you can see here that even though it's dropping, it's still blue, so the bulls still have control of it. Now it jumps back up and it bounces, but then it turns red. So how do you know is it going to continue or is it not? And I want to clarify that none of this is 100%. It can happen either way. This, hindsight is 20/20. It could have gone down, but all of these things that you're looking at and paying attention to are giving you signals. Are you having a really strong bull signal? Right now, this looks pretty bearish. It does. If I put the mouse over to right where the red is starting to go down, the second drop, and it starts to turn bearish, the MACE histogram is in the red. RSI it's medium, so it's good, but the MACE 2 lines have crossed, and usually when they cross, that means it's going to be going down. So why didn't it? Well, even here we have the bearish signal, and you would think that maybe it'll bounce and go back down one more time. However, in my first video, I gave a list of 15 different types of patterns to look for. One of those was a ascending triangle, and as you can see, the $2 mark is a psychological barrier, so people are always going to sell right at the $2 mark, and it's going to bounce down. However, you can see that it's starting to trend up, and if you draw a line, that's a clear trend line of an ascending triangle. So that's another signal that it's going to continue to be bullish. So even though it's red, it's climbing up the ascending triangle. And what happened is probably a bunch of people got scared and turned it red, but it still continued to move up even though it was bearish and all the other signals are going. And as I was watching the live stream, I saw a lot of people chatting that it was going to flip, it was going to drop down. But from what I could see, it looked like an ascending triangle, and that's what happened. It ended up breaking out at the $2 mark. But there's some more momentum indicators that we can add to this to even get a stronger idea of what's going to happen. One of those things is the TTM Scalper alert, which are these arrows right here. Now, I've customized mine to be red and blue on the signals. When you have bluish lines, it's bullish. That means the stock is probably going to go up. So now, each one of these, we have a signal down here at the bottom, which is bullish. We have another signal that's bullish, even though it stopped at the $2 mark. And we have another one here. So we've got multiple bull signals and only 1 or 2 bearish signals on top of the pattern of ascending triangle. So it looks like it's going to break through on $2. A lot of strong support for the bulls. So once it does, it breaks through, and we have our first bearish. This is actually the high of the day. So, just off of these tools, if you were paying attention and you really knew what was going on, if you bought in at $1.60 or $1.61 and you sold out, up here at the high, at the first bounce, or even the second bounce, it closes out up here at $2.19. That's 60 cents in profit. If you had $1,000 in shares, that's $600 in the first hour of trade. It'd be pretty nice to make $600 an hour. All right, so TTM Scalper alerts are really nice for indicating which way a trade's going to go. So obviously you see here, red means bearish. It's coming down. It hits a scalper and it starts to flip. If we scroll over here, it's below the VWAP line, which is an indication that it's a little bit undersold. The MACE 2 lines are starting to converge, which is an indication of bullish, and the histogram is turning too, and the RSI is really low. So it's a good chance right here, all of these signals are saying it's going to go bearish, and that's what it does. It rides up to about 212, where it breaks through the $2 psychological barrier. And also, this is a very low volume too. It's only 60,000. So you would want to get out of this trade here and leave it. Now I'm going to show you a thing called the TTM Squeeze, which is a really nice indicator for momentum. But in order to understand it, I'll show it to you real quick. This is the TTM Squeeze right here. But in order for me to show it to you and explain it to you, it'll make a lot more sense if I show you 3 other simpler momentum studies, but so that you'll better understand this one. So let me just clear this all out real quick. Okay, so now we're back to the basics. Let me add the Bollinger Bands and the Keltner Channels. Now, Keltner Channels are a measurement of volatility based on EMA, or Exponential Move Average. And I haven't covered the Exponential Move Averages, but they're also very common in day trading. You should check them out, research them. They're also called EMA, and there's another version called SMA, which is Simple Move Average. And there's also Exponential Move Average. There's all kinds of move averages, and you should learn them and understand what they do and how they work. For this, the Keltner Channels are the red, and they are based off of the Simple Move Average. Now, Bollinger Bands are a measurement of momentum and explosivity in a stock, and that's in the blue lines. And you can see as the stocks explode out of the gate, Bollinger Bands explode out too. Now, typically, Bollinger Bands and Keltner Bands, when they're together, can be a really good indication on where a stock's going to go. For example, they start to converge here and they cross. And usually what this means is there's more volatility than there is momentum, which means that the stock is going to explode out. You know, it's condensed, it's contained, it has to go somewhere. And this can be a good indication on when a stock is going to break out somewhere. And as you see, it builds up right as it hits the $2 mark and it explodes out, and then the Bollinger Bands go outside of the Keltner Bands. So these two things combined can be a really good indication of a stock's explosivity, or where it's about to break out before it does. The next one that we need to look at is called Mometum, and it's just a lower study, and it is which way is the stock going. We see here it goes down, and as the day is about to open, it's down, and then it starts to turn back up, and it goes positive. And right here, it breaks, and it breaks out high, and then it bounces and bounces and bounces. All three of these things, the momentum, the Bollinger Bands, and the Keltner belts, are actually combined into what I'm going to show you now, the TTM Squeeze. So you don't have to use any of these three that I just showed you, because this one will show them to you all. Now, let's look at this as it is. So, what we have here at the beginning of the day before the market's open, it's in the red, and that's exactly where the momentum is. The momentum line is in the red, and you can see as it crosses, so does the TTM Squeeze. So momentum's blue, the bulls have control, and also the Bollinger Bands and the Keltner channel are showing the exact same. That's basically it. It's just a basic histogram of the momentum of a stock. However, you see these dots right here? When the dots are green, that means the Bollinger Bands are outside of the Keltner belt. So the equilibrium is kind of harmonious, and it's not going to go do anything crazy. But as the stock slows down and the volatility and the momentum slows down, the Bollinger Bands cross the Keltner belt. And as you see, the dots turn red. When the dots are red, that means volatility is happening and the stocks are poised to explode either way. Now, this doesn't tell you which way they're going to explode. Again, this just shows you that there's volatility building up and it's too much for the contained momentum. So something has to happen. And that's where the TTM Trend and the Scalper alert comes into play. Let me turn those back on. Now you can kind of see when you combine all these momentum studies together, you can get a very powerful indication, a very strong signal of where you should be and what you should be doing with your trades. Let me turn off the Keltner channels because you don't need them. They're not really, and we also don't need the momentum. So just with this study over here on the right, that tells us a lot about the stock. I mean, we can tell which way the stock's going to go just on this graph. But there's more signals that we're going to add to this in the left graph, that it's going to give us support and resistance lines in the Ichimoku Cloud, which basically you're pretty sure where the stock's going to go before it goes. But we'll get to that. So just to recap, we have the TTM Trend, which is the blue and red. Good indications on if the bulls are taking over, the bears are taking over. We have the TTM Scalper alerts, which is the arrows that also tell us bull or bear signals. We have the TTM Squeeze, which is a combination of Bollinger Bands, Keltner belts, and the momentum scanner. And then it also tells us volatility and momentum and whether it's going to converge or explode, or if it's pretty stable. That's a pretty powerful study right there. And then lastly, one thing that this thing does not take into consideration very well is volume, and you really have to stay on top of volume on what's going on, and it can be a good indication on what's going on with the stock. For example, when the stock hit $2 and bounced, you see a lot of volume, a lot of people doing stuff, but then it kind of dies down. So even though the stock is coming down here in the bearish signal, there's not a lot of momentum there. The volume is not happening, which is a good indication that the stock isn't going to really plummet down through its resistance. And you could consider this trend line a resistance, but I'm going to show you a much better way. But before that, let me show you one last thing on this momentum scanner, which is volume profile. This is a horizontal indication of volume, and I actually have to come over here to show you that. Actually, it's not going to show right now, but it's this white. If I change my volume profile from the minute to, let's do the chart. So what this does, you can see here, this is all of the volume based on price. This volume profile is really useful if you set it to in the minute, because then it shows you how much is selling at each price. So am I going to be able to get out of the stock in time? And it's just another really good indication for volume, other than the volume bar down there. All right, so with that said, now let's take a look at some good ways to draw support and resistance lines. And this thing is probably my most favorite study so far. I really, really like this. It's very complicated, but that's kind of what makes it beautiful, is that it gives you a really accurate indication on what's going to happen. So when you combine the Ichimoku Cloud with everything I just showed you, it was weird to kind of see what was going to happen before it happened. I'm only 2 days into this, but I was nervous that I was wrong, but it turned out that it worked out pretty well. And I'll show this trade happening live and predicting it even before it happened without the momentum scanning. I just had the cloud up and I was able to see where the trend was going to go. And real quick, I've set this custom. This is my settings if you want to put yours to exactly like mine. I'm going to turn these on, and I'm going to turn it on one by one because the cloud is complicated and each one of these things means something different. Okay, so ignore the cloud for now. I couldn't turn it off, but the Chiku span line is just the closing price shifted back 26 places. Now the Chiku span alone doesn't really mean anything or do anything, but when you combine it with what I'm about to show you, it's a very good indication of bullish or bearish trends. Now the blue line is the TTM San, and it is an average of the highest and lowest priced in the last 9 trades. So if you were to take this square right here, the highest price and the lowest price is what this line indicates. And since the Chiken Sen lags behind, a good indication on if a stock is going to start to go bearish is when it catches up to the Chiken Sen line and crosses it. If it does, that's a signal of potential bearishness. Now the Chiken Sen can be a good line of support, and actually this entire cloud actually has layers of support. So if it breaks one, you know where the next one is going to be just in case, and if it breaks that one, you also know where it's going to be again with the cloud, which I'll show you in a minute. Now the Kijun line is the dark blue line, and it is the average of the last 26 periods highs and lows, and it is the second line of support for a breakout if it's going to happen. And then lastly we have the cloud, which is probably the most confusing part of the Ichimoku, but it's also the most powerful. Span A is a combination of the Tikinsen and the Kijun divided by 2. So if you take the blue line, the light blue line, and the dark blue line, you average them, that's the span A, which is the top side. When the cloud is yellow, it's the top side. When the cloud is red, it's the bottom side. This is the third layer of support. And you can see real quick, as the stock consolidates here, and we're starting to get bearish signals on the momentum scanner over here, and it's starting to cross the Tikinsen line, crosses the Kijun line, the blue crosses the dark blue. That's another signal that it's going to go bearish. And on top of that, if you shift back 26 periods, which is about right here, the Chikinsen line is about to cross into the candlesticks, which means that it's going to be bearish pretty quickly. Now, what's nice about the cloud is it's actually projected forward 26 periods. So you can see where a stock is going to be before it gets there. And you'll see this in the video in a minute. Now, span B isn't the same as span A. It's actually a price average of the last 52 periods shifted forward 26, and that's what creates the cloud. Now, with all of these things combined, you get a lot of signals that can tell you where a stock's going to go before it goes. Now let me show you the video of me watching this live with just the Ichimoku Cloud and predicting where it's going to go. All right, it is June 27th. This is the second day of paper trading, a series where I show you my screw-ups and mistakes so that you hopefully don't repeat them. I apologize for the 3D printer sound. I've got some parts that I got to get printed out for a customer by tomorrow, so I have to get it running. Actually, you know what? I might be able to edit that out in post. That's better. All right, let's get started. BRF's still holding right at that $1 mark. Let's put a alert. It's going on an upward trend. We got a clear line right there. The break should be somewhere right here pretty soon. It's still way above the cloud. It's looking good. It's got a lot of potential. I wish Robinhood wouldn't flag my account, because then I could have bought into this. Or if I was better at it, I could have bought in at the day open. There it goes. There's going to break again. I wish I could buy into it. Mace lines are flipping though. RSI's good. It's breaking. There it goes. Yeah. Ichimoku Cloud. Everything looks perfect. The Kijun-sen line, it broke as soon as it got here. If it had crossed the Kijun-sen, then it would have probably broke down. But the ascending triangle looked perfect. It's under the VWAP. It's under the what's this one called? Oh, that's the move average exponential. That's not a big deal. With the cloud, it's so far away from the cloud. This thing's gonna run all for a while, and it's got nowhere to stop too. It's broke through the $2 mark. It might stop at 225. I don't know if quarters are psychological resistances or not. Because the volume's dying down, the mace lines, the RSI is all good. Now there it goes again. A fourth probably would have been a safe bet to just sell out at 210 and call it a day. It's still looking solid. It's perfectly in line with the Ichimoku Cloud. I don't think it's going to flip anytime soon until it starts to taper off, until the cloud starts to shrink. That's the ascending triangle. It broke right here, so that's a little more accurate than this one. Let's get rid of that. Here is where it's going to break. This is clear resistance right here. There it goes. The cloud's still looking fine. Volume's not looking too hot. But that's picking back up now. People see it. People are buying in. This cloud is amazing if you know how to read it. If you know what it does, it is so useful. It is so much more accurate and reassuring than just looking at the mace lines or the RSI or the TTM, anything like that. So you got a clear line here. It's resistance. Mace lines are looking bad, but the cloud's starting to close in. It just broke through, but it looks like it's starting to slow down. And if this touches, this is like what's that game? Snake, where you're playing the snake. If the snake touches the snake, you're dead. Right. That's not a good sign right there. Same with this. This would have been your sellout. So now we're starting to get a pattern. This is a triple top, I think. Yeah, triple top. It's probably going to break south. And but what's nice is the Ichimoku Cloud is telling you that it's really close to the Kijun-sen line. The cloud is starting to slow down. The the Chico line, I think that's Chico line. Yeah, the Chico line is starting to get close to it. If this touches, it's probably going to break. So it'll be interesting to see. This is going to bounce here and probably break south at the exact time that this line is going to touch. Same with this. These two will probably touch at the exact same point. This is just going to ride over that high, but I don't think that's going to be a big deal. When it touches this, something's going to happen.
the MACE lines are looking good. So somebody that's watching just the MACE lines and the volume and the RSI, you probably think that this is a good bet, but based on the cloud, probably not. It's already broken through its trend line, so that's not a good sign. So each one of these things is a signal. You know, this is a signal. It's broken through the trend line. That's a signal. It's touched the QGSN line. That's a signal. The cloud is starting to close up. That's a signal. Volume's low. That's a signal. MACE lines are low. MACE lines are converging, so that looks good, but everything else is saying it's bad. And it's also doing a triple top, which I believe it means it's going to break south. Let me Google that real quick. Yep, so boom, 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 down. That's exactly what's going to happen. The reason it's probably not hitting the top is because the volume's died down. Look at the volume here, in between here versus right here. It's almost dead. So even though it's not doing a triple top, yep, there it goes. Even though it's not doing the triple top, it would hit the top if the volume was the same. But since the volume is lower, you're just not getting that much of a price difference. But it's the Chiku line is coming in. It's touching the QGSN line. It's now again though. If you're looking at the MACE lines and the RSI, you might think that it is. It's right on that line. It's not looking good. It's about to touch the cloud. And I don't think it's gonna be taken off. Yep. There it goes. That would be the bounce. But because it's such low volume, you can see here it's the lowest volume out of the entire day. You would think that it's not doing a triple top, but it is. It's just not reaching it because it doesn't have the volume. There it goes. Went through the Ichimoku as soon as it went through the cloud, or through the what's it called, the QGSN line, and it hit the cloud. This was the first signal. The Chiku span line touched. Then it's triple topping, low volume, so it doesn't reach it. Touched the Chiku line, hit the cloud. It might come back up, but it's looking like it's going to be going down. Yep, it's going red. It'll probably just float. Now, if the RSI was, up here, then it'd probably tank. It'd probably go way, way down. But, yeah, well, hell, look. I think it broke even more now. Or yeah, it's inside the cloud. The cloud's shrinking. Yeah, nothing's happening.